Good morning. It is Tuesday morning, a little after 10 a.m. Eastern Time, August 18th, the year of our Lord 2015. Video number 3. And I appreciate your audience to listen to these. What we're going to do is highlight several items today. One is about the U.S. plunging dollar because of the Chinese devaluation. We're going to talk about how gold jumps after China acquired 19 tons of gold. We'll briefly discuss Germany's acquisition of gold, Social Security Medicare future. We'll talk about gold manipulation and the stock market, the conventional forecast, prophecy, if you want to say that, although I don't know if that's the right word to use, but it's certainly that the stock market seems to be hitting a tipping point. So let's get into the material here. The Chinese devaluation, which I'm sure you've heard on the major media as well as alternative media, much less all across the internet, has caused the U.S. dollar to plunge against the euro and other currencies. Why? Because with the U.S. dollar being the primary reserve currency, it has lowered its worth against these other currencies. So the basket is definitely lowered. That makes it very difficult on exchange rates for those who hold U.S. dollars because they're getting discounted without even really knowing what's going on. So hence the Fed has talked about or threatened to raise interest rates in September. And it's not going to happen because it will further roil the markets, much less deepen the U.S. dollar plunge against foreign currencies. So you're just not going to see that happen. If the Fed even mentions it again in the subsequent weeks, they'll be laughed out of the room. So don't look for that to happen. Number 2, gold jumps after China purchases 19 tons of gold. China continues to be the major acquirer of gold across the global spectrum. There's a reason for that. Let me read some highlights. Now that the seal has been finally broken, after so many years, and since today's update, now this was dated back about a week ago, indicates the Chinese gold numbers are clearly gold-seek, meaning China has an agenda. They have a reason. There's a wisdom, there's prudence on their part to prepare and make a change out of fiat currencies into gold. It's just like what we talk about in other videos. They're taking fiat currency worth nothing or very little and exchanging it for a storehouse of gold. And what would that be? G-O-L-D, gold. So, and with a specific policy purpose to boost confidence. We await for the PBOC to start leaking incremental gold holding data every month, especially in the months if the market crashes, which will bring us ever closer to what the Chinese true gold holdings are. If and when that information comes out, you're going to see some rolling in the markets. If you're sitting in gold, silver, other precious metals, you'll be positioned correctly. 1 month later, this is precisely what's happened when overnight the People's Bank of China reported that even as the price of gold dropped once more in the month of July, after an epic June drubbing when China supposedly bought 500 tons of gold, it added another 610,000 ounces of the yellow metal, or 1.1% of its total holdings. That's significant on the global market. So, Chinese government they're visionary. You can say what they want about them being communist or socialist or whatever, but they've been on this agenda for a while. They're making preparation. They're exchanging fiat currency for gold. Let's go to the next point. Germany, reading a highlight. Germany continues to lead the West in physical gold demand. So you have China, Russia, Germany. Even though most of the world's gold supply continues to flow to the east, German demand for physical gold investment remains the highest in the West. This is probably due to the percentage of Germans who are not at all happy with the current financial system with the European Union, including the ongoing situation in Greece. So I commend the Germans. They see the tea leaves. They're reading what's developing. They know they need to make a switch. Again, the history, 6,000-year history of gold and silver, again, precious metals, has proven itself. I know I sound like a broken record. I'm just highlighting what people in other countries, other governments are doing to make prudent and wise and wisdomic exchanges to get out of what their current currencies into a storehouse of wealth. The next point, Social Security and Medicare. Again, reading a highlight. I get these articles, I'm highlighting articles off the internet. That's where I get this information. The Social Security Medicare trustees have issued their latest report. This report is within the last 2 weeks. Today, again, is the 18th, so it's within the first 2 weeks of August that this report came out. The Social Security Medicare trustees have issued their latest reports, and they are not easy reading for the uninitiated. I suspect most of the trustees hope you don't read them at all. What's that tell you? They prefer their own spin. Under both Republican and Democratic administrations, these reports are invariably accompanied by a press release that completely ignores what is important and focuses instead on what is important. What's unimportant? The trust fund and when they will run dry. Now, we've all heard this before. Like most Social Security systems in the world today, ours is a pay-as-you-go system. Nothing has been saved or invested. I think you know that, and if not, now you do. There's no reserve in those accounts, Social Security or Medicare. So let me ask you this. What did people do? What did societies do before the 1930s when Social Security was instituted during the Roosevelt administration? Or what did people do with medical situation prior to Medicare being enacted in the 1960s? What did they do? Maybe we should go back and look at that. How do communities, more on the local, regional level, take care of these situations that we're facing? It used to be done on the local level. There are ways to do this. So, what we call trust funds consist of nothing more than IOUs. The government has written to itself. Yet, that is what the official press releases emphasize. This focus is reflected, and there's a graph below which I'm not going to show. So what's important? Cash flow. In effect, in a pay-as-you-go system, cash flow is the only thing that matters because that's the only thing that puts cash into the system. That's how the beneficiaries get their money, is as money comes in 1 week, it goes right back out the next. In the second graph shows Social Security and Medicare paying out more than they are taking in. What's that tell you? As the baby boomers retire, the total deficit will grow dramatically. Currently, we are using about 1 in every 7 general revenue dollars to cover this deficit. That's 1 out of 7 revenue dollars out of the entire U.S. government budget. By 2020, we will need more than 1 in 5. By 2030, it'll be 1 in 3. What's the future of that? Briefly, I was in the senior market, insurance market, serving the basically over 65 market. And I will just say this, I won't talk about what markets that I serve, what cities, but I will say this, over 80% of the people, probably more of the seniors that I serve, relied nothing but Social Security. That was their only form of income, and Medicare and other social services, which is all fine and dandy. My nightmare, my concern is if there's ever a glitch in the cash flow of Social Security and payments don't go out, God help us, because that's going to put a lot of seniors in to put it in a pinch is being very mild. I fear that. I'm very, very concerned about that. Here's what I am saying. If you're not in a position, don't get yourself in that position. Make preparation now. We should talk to our local, regional, talk to our churches, talk to community officials, talk to your neighbors. Figure a way to handle these kind of situations locally. So, the couple more points is 2 more points, and then we'll close this out. Gold manipulation. The worth of gold is growing day by day. Now, you may ask, well, Richard, isn't the spot price sort of been in our trading range? And it's in gold. Frankly, the gold spot price has been declining. It's trading just above $1,000. I don't know. I haven't looked up today's spot price. I could do that. But let me highlight some things from this article. This was dated August 12, 2015. The worth of gold in the world is growing by the day. That might seem like a paradox, but it isn't. The worth of gold is not fixed. Listen to me. The worth of gold is not fixed on the COMEX futures exchange or the trade in London or Zurich. True, most of the gold trading public takes its cues from the CME's or COMEX gold futures prices, where it does not at all look like the worth of a bar of gold is growing. Why can we speak of the gold's worth rising? The COMEX gold futures market in New York and over-the-counter trades cleared through the London Bullion LBMA are set prices which are followed most likely by the world. They're basically the trades of the markets. These markets, New York and in London, are controlled by basically a handful of people. You don't think it's manipulated? You don't think it's controlled? Let me highlight these few articles. In short, the buying and selling of gold in London and New York is a questionable hands. There are even rumors that some of the top names in gold trading are involved in major criminal fraud. Imagine that. Using gold plating on tungsten bars to circulate fake gold bars. Better watch where you get your gold from. Confirmation is naturally extremely difficult, but a sensible caveat emptor may be to drill a tiny hole through the next gold bar you buy before paying. Meaning, if you're buying gold bullion in the big bars, you better have it pre-checked out. So, Western banks of late have created gold ETFs or exchange trading funds. Gold derivative funds backed by gold are not paying out in gold. The trading of so-called paper gold futures and other forms of speculative contracts where no physical gold is delivered, while at one time had a rough connection to the buying and selling of real gold, it doesn't anymore. Today is totally disconnected from it. It is a casino unto itself, blissfully free to decide what gold prices we pay. We are left with a gold market where the price is manipulated, as with crude oil, by large banks and Western central banks who decide the ultimate price. Some other highlights. Russia is vigorously adding to its central bank gold reserve for the past several years. China, Russia, Germany. During the Yeltsin era in the early 1990s, the Yeltsin Mafia reportedly robbed the state of virtually all gold reserves. During the Soviet years, gold backing for the ruble was considered unnecessary in the command of central state planning. Well, what happened to the Russian economy? As the official statistics, official gold reserves stood at 1,250.9 times. In the first 5 months of 2015, Russia has increased its domestic gold mine production by a factor more than 6-fold. What's that tell you? Russia's vast Siberian is known to hold huge untapped gold reserves. You don't think they're going to take advantage of that? So, in combination, wrapping this up, in combination with the Chinese Silk Road Rail Infrastructure Initiative and the new $16 billion China Gold Fund to support gold mining projects in the Silk Road Path, Eurasia, led by China and Russia, are about to transform the listen to this, they're going to break transform the vice grip of the Anglo-American grip on gold, which has been kept the true market prices are artificially manipulated and depressed for decades, and have effectively blocked the natural flow of gold through the world economy. While most eyes are fixed on COMEX and the LBMA, London Bullion Market Association listed daily gold price fixed, the real worth of gold is a currency reserve and a standard of monetary soundness is growing worth day by day. There's no doubt, this no doubt gives the people of the U.S. Treasury and Federal Reserve and Wall Street some serious gas pains. You talk about the drug cartels. What about the financial cartels, or the cartels that control the spot prices of gold and other precious metals? Ladies and gentlemen, we are living in epic times. Prepare yourself. Think, be wise, be prudent. Don't just listen to conventional thinking. Go to alternative thinking. source good information, make proper preparation. Good day to you. We'll look for you in video 4 in about 2 weeks. Take care.